Good morning, everybody, and thank you for joining this PSG Think Big Series webinar. My name is Untitled, and I'm the head of the PSG Multi-Management business and Chief Investment Officer at our wealth business. It's been an eventful US election, to say the least, and today we've got Larry Hatheway here with us to give us his insights in terms of what the future may have in store for us. We had Larry on the 13th of October as a pre-election briefing, but I'll reintroduce him again for those that were not able to view the webinar at that stage. So Larry has 25 years of experience as an economist and a multi-asset investment professional. He is the co-founder of Jackson Hole Economics, which offers commentary and analysis on global economy, policy, and politics. Previously, Larry worked at GAM Investment as group chief economist and global head of investment solutions. And prior to that, at UBS Investment Bank in various roles for a prolonged period of time. He served as the UBS chief economist, head of global asset allocation, and global head of fixed income and currency. Larry is widely recognized for his contributions in various media formats, Bloomberg Radio, CNBC, the BBC, CNN, Financial Times, and of course, Jackson Hole Economics itself. Larry holds a PhD in economics from the University of Texas and a master's in international studies from the Johns Hopkins University. In terms of our format for today, we'll do approximately 30 minutes of a presentation from Larry's end so that we have a better idea of the landscape and some context. And then on the latter half of the presentation, we'll do some Q&A. So that's it from me. Let's get started. Over to you, Larry. Thank you very much for joining us today.
Well, thank you, Adrian, for that kind introduction. It has indeed been a momentous, almost nearly a week now, since US voters physically went to the polls. Of course, they were voting early and through the mail long before then. It also took us, obviously, quite some time to hear the final results. And even as we speak today, there are recounts underway in several states. But I think we do know the outcome of the election, that former Vice President Joe Biden is now the president-elect, joined by his running mate Kamala Harris as the vice president-elect. In the presentation today, I want to talk a little bit about the election, about some of the contours of the results, and then move on to what it means for the world economy, for public policy in the United States, and also make a few observations about the broad implications for how investors should view this, that is, for the impact on financial markets. The title of my presentation, The 2020 Election in the United States, Decisively Undecisive. And while I know the results were greeted in the streets of many big US cities and many places around the world with jubilation, we've all, I think, seen the scenes. I think we have to remind ourselves that the election was not just about the next president of the United States, but also about many important other parts of the US government, the US Senate, the House of Representatives, governorships and state and local government outcomes. And if you look across that array, that spectrum of outcomes, what I think you see is an American electorate that made one big decision, that is, who will be the next president of the United States, and rather decisively made that decision. But in many other ways, the messages are very, very mixed about the preferences of the US voters, and of course, what that ultimately then means for how we will see the new administration govern once it assumes office in on January 20th of next year. And I'll get into some of those things here in just one moment. First, in terms of just the overview, I want to then review in a little bit of detail some of the election results, because as I said before, I think that makes not only sense to go through it, but also it's going to be important in thinking about what comes after the government, that is the new administration, the new Senate and House are sworn in and are seated in the early part of 2021. I want to talk about the implications for US politics, but also for policy, for things like fiscal policy and regulatory policy, foreign policy and trade policy. And then, as I mentioned, draw some broad implications for growth and for interest rates, for corporate profits, for the US dollar, things that will also matter then for how broader equity, fixed income, currency, and commodity markets may behave as we look into the relatively near future. In terms of the election results, these are a few of the sort of the broad conclusions. We had a rather narrow repudiation of Trump and Trumpism. Now, that might come as a bit of surprise to characterize it that way. But in terms of Trump's performance, that is the number of votes that he got, he had the largest number of votes received for any president who has lost an election, whether a first time or a re-election attempt, over 70 million. Of course, he lost by a relatively large margin, as we'll see as well, but it certainly wasn't, let's say, a broad-based nationwide repudiation of Trump and Trumpism. It was selective by region, and as we'll see in a moment as well, it was rather selective when we look at the different kind of voting cohorts. And that's going to matter because although Donald Trump will exit the White House on the 20th of January, it's not entirely clear that he as an individual or the movement that he represents is going to recede so quickly. There was a modest Democratic pickup in the US Senate, although we don't know yet the final results. That is, Democrats currently can register a 1-seat pickup from 47 to 48 individuals is confirmed. Republicans almost certainly now will hold 50 seats at the very least. There are still some contests that, as I speak at least, are still to be determined. And there are also going to be 2 races that are highly probable to end up in a runoff. Those are for 2 Senate seats from a single state, that is the state of Georgia, which traditionally is a Republican state. This year appears to have gone narrowly for Joe Biden at the presidential level. And of course, if the Democrats pick up both of those seats on a runoff that will take place on January 5th, then we would end up with an even 50-50 tie in the Senate. And according to Senate rules, on any votes that are actually tied 50-50, the vice president casts the decisive vote as the president of the Senate. That is what Kamala Harris is, one of her many roles will be. And so it's possible that major pieces of legislation that break on exactly on party lines or otherwise are split 50-50 could see the decisive vote cast by the executive, that is by the vice president. And for those who are history buffs, you'll know that the Affordable Care Act was decided on such a vote just about a decade ago now. But it wasn't a blue wave. The Republicans did relatively well in holding on to a number of seats that they were contesting. They were contesting twice as many seats in this election as Democrats, and so they were kind of behind the 8 ball and nevertheless did fairly well in the Senate. This is one of those ways in which I think the election was not quite so decisive as it appears at the headline or presidential level. Indeed, Republicans also gained seats in the House of Representatives. The numbers portrayed here now a little bit out of date. We'll know a little bit more about some of the undecided contests, but there is every expectation the Republicans will have picked up something around 8 to 9 seats in the new House of Representatives. And although the Democrats will retain their majority, it'll be a narrow majority for Speaker Nancy Pelosi and for her party, which again is a sign that while voters may have repudiated Donald Trump, they did not repudiate, let's say, the Republican Party. Republicans also picked up a net 1 seat as amongst the governorships that were up for election. They also picked up a net gain of 1 state legislature. So as I said before, voters may have rejected the extreme that was represented by Donald Trump in both maybe governor, the way in which he was governing the country, and also in perhaps in terms of personality and other things. But they didn't really deliver a resounding mandate for the president-elect, that is for Joe Biden. The probable shape of the Electoral College, we have to remind ourselves that US presidents are not elected directly by the popular vote, but by the popular vote as it's expressed through the states one, who elect electors who then ultimately will cast their votes for the next president. The probable, I say this because at this juncture, we still don't know a few states, is that Biden will have won 306 electoral college votes. The minimum, that is, the majority required was 270, so a healthy margin over that 270 mark. and that Donald Trump will have won 231. Put that also in some context, it's exactly the same outcome, of course, in reverse as 2016, when Trump defeated Hillary by the same numbers that we see here. As I said before, in terms of the U.S. Senate, it'll be very, very closely divided between Republicans and Democrats. And one of the things we have to remind ourselves is the rather sort of unfortunate world that the United States has been in for at least a decade. One could say for longer than that, which is that the divisions are very polarized as well. Perhaps, when I was a younger person, 50 years or so ago, there was a lot of members of both the Senate and the House and other bodies of U.S. government that were genuinely bipartisan, where people could cross party lines to build coalitions to vote on legislation. That is not so common these days. Party line voting has really become the nature of the US government. So with the Senate so evenly divided, as we'll see in a moment, that has implications for just what President Biden can actually achieve, at least in terms of major pieces of legislation for US, primarily for US domestic policy, but potentially with implications for foreign policy, for example, treaties that would have to be ratified by the Senate. And that, as I mentioned a moment ago, the Democrats will, when it's all said and done, still have a majority in the House of Representatives, but it will be a slimmed down majority. Probably matters a little bit less for legislation because the majority is going to be fairly healthy for the Democrats and on major pieces of major bills, that kind of thing that come up. Democrats will probably be able to carry majorities in the House, but again, the Senate could be the stumbling block for initiatives that are coming from the Democratic side of the aisle. Trump repudiated, sort of. He did lose the popular vote by over 4 million votes. That seems to now be pretty well recognized. And that's a larger loss in terms of the popular vote than he even suffered in 2016. Again, just for context, you can lose the popular vote but become president through the quirk that is the Electoral College. But the way in which he lost this election was by a larger margin than in 2016. On the other hand, he won 8 million more votes this past week than he won in 2016. He garnered 62 million votes, roughly speaking, in 2016, over 70 million this time around. So it is not as though Americans sort of turned their back on Donald Trump and went in the other direction en masse. What happened was there was a big, big turnout this time, much larger than we typically see in US elections. People did come to the polls and vote with passion, no doubt about it. And so the other side obviously saw their margin go up relative to their popular vote margins in 2016. But it is not correct to say that the Trump or Trumpism was repudiated. It's also another way of looking at this is that when you toed up that Electoral College margin that I looked at before, in those key states that took Joe Biden over the 270 vote threshold to something like 306 votes, if you add up all the votes in those half dozen states that carried the day for Joe Biden, his margin of victory in total across all those states was less than 500,000. Probably it's going to be closer to something like 300,000 votes, or out of 145 odd million people who voted, that's less than 0.2%. So the margin was actually, in many respects, much, much tighter than perhaps some of the other metrics that are being bandied about would suggest. As I mentioned a moment ago, in several different ways, there was no blue wave. A lot of people thought there would be a blue wave, that the Democrats would sweep into the White House, sweep into a majority in the Senate, build on the majority in the House of Representatives, carry the day in state and local elections, and they did not do so. So again, to repeat myself, I think Americans rather narrowly decided what they did not want. That's called Donald Trump. But it's a little bit less clear about what they actually said they did want. And that's going to be important as we move forward in this discussion today. So in terms of the presidential election and some of the numbers behind it, if we look at them, these are based on exit polls, and exit polls can have obviously margins of error, but if we take them as broadly correct, we can infer a few things about how the electorate decided in this early November election. Men of all of all sort of races and so forth, split evenly for the two candidates. It was really the female vote that decided it for Biden, and rather decisively so. Also important to note that there are more women voters, about 53% of total voters are women versus 47% who are male. So that big margin was then added to by virtue of the fact that women showed up at the polls in greater numbers than men did. Donald Trump really rather decisively won the white vote. That's a combination of men and women. He, as typically is the case, rather decisively lost the black vote, although he did pick up a little bit there compared to 2016. And by fairly healthy margins, also lost several other, let's say, subgroups, the Latino vote and the Asian vote. If we, in a slightly more complicated way, look at some of the results, comparing the margins of victory, and I'll explain here these numbers, and I won't go through all of them, but just selectively refer to a few of them. If you look at the margin of victory of a sub-cohort in 2016 for either that time Hillary Clinton, or 2020, this time, let's say, Joe Biden, we can also see in some other ways how this election turned. By age cohort, the big victory for Biden was really establishing a big majority compared to even what Hillary Clinton enjoyed in the group that are the young people, those who can first vote at the age of 18 up through the late 20s. That really broke decisively this time for Joe Biden. Where it's colored in blue, it meant that it was a percentage point margin for the Democrat, in this case Biden, or in 2016 for Clinton. Where there's red shading, that is where Donald Trump, both in 16 and in 2020, kind of controlled at least the margin. As you move up in age, you'll see that those margins shrink, and still it was an interesting kind of group, another subgroup, the 45 to 64s, that began to shift towards the Democratic side as well when we look at things by age cohorts. And fewer older people, those over the age of 65, this time supported the president, although obviously by a margin they did. We've already gone through at least some of the gender numbers, and you can look at them when you break down specific numbers. But what's kind of interesting is that when we turn to people of color, Black or Latino voters and so forth, although they all in the aggregate continue to be solid majorities for the Democrats, in many cases they aren't as solid as they were before. And I think that's going to catch some people by surprise, that Black men and Black women, the margins were so decisive for Hillary Clinton back in 2016, huge percentage point gains, 90 to 10, that kind of thing for Black women. Well, that slipped away a little bit. The BLM movement and social unrest and issues of violence and so forth are really causing some erosion, perhaps in the faith of that subgroup in both parties, perhaps, but also in particular, maybe in Democrats. And also even in the Latino men area, the Democrats who enjoyed big majority, used to be about a 30% percentage point sort of advantage, saw some of that dwindle away as well. And then you can look at it by education as well. And as we saw back in 2016, white voters, male and female, who do not have a degree, no college degree, were a big, huge cohort for Donald Trump in his victory over Hillary Clinton 4 years ago. They remain a fairly sizable cohort for him, although there too he lost ground. And ultimately in some of the key swing states, a place like Georgia, perhaps Nevada or Arizona, and certainly maybe in the Rust Belt, the industrial Rust Belt that Biden won back, states like Wisconsin, Michigan, Pennsylvania, that movement there, and white voters with no degree supporting him, but supporting him less than in the past, may have really been the decisive vote that shifted, leading to the Electoral College victory that Biden enjoyed. So let's now move on from some of those numbers and talk about then ultimately, I suppose, the things that we really care about. So the implications first for politics and then for policy growth and markets. I think the biggest question we now really have to ask is, can Biden unite? We've seen the numbers. He doesn't really, he won't enjoy an absolute majority in the Senate. We know that for sure. He may be still be confronted by Mitch McConnell, who would then lead a Republican majority, depending again on those special elections in Georgia. And therefore, Biden really has to be a bipartisan president. By his very nature, he is. He always worked in a bipartisan fashion when he was in the US Senate. He is, by his sort of constitution, an agreeable person, non-ideological. I think voters definitely were drawn to that in this highly polarized, highly divided, and crisis-ridden US political system. So they definitely want him to try to unite, but it takes two. And the takeaway from the Republicans is, well, we may have lost our leader of our party, but we didn't lose votes elsewhere. And therefore, there's probably going to be a real issue for the Republicans about whether they dig in their heels and act as an opposition, uncompromising party, as they largely have in recent times when Democrats control the White House, particularly under Barack Obama, or maybe they'll decide that in some areas they can compromise. So it's going to be, I think that's going to be the decisive things in terms of what can get done. I don't think the election delivered a mandate for economic policy. This was not an election on differences in fiscal policy, in fiscal stimulus around the coronavirus epidemic, in terms of fiscal stimulus, fiscal policy long-term, big budget deficits have to be addressed. That just wasn't really on the ballot. Nor were taxes in particular. Didn't seem to matter very much when you look at exit polls. So it's hard for Biden to say, I have a mandate to raise corporate taxes, to raise, let's say, capital gains taxes. But it's also not really possible for Republicans to say that those things are unpopular either. It just really wasn't something that mattered very much to voters. Surprisingly, there was no mandate on healthcare policy. By the time we watch this, we'll probably have a Supreme Court decision as to whether they strike down the Affordable Care Act that Obama passed. If they do, then it's back to work exactly where Barack Obama was a dozen years ago in terms of trying to develop a healthcare system that works for those Americans who otherwise lack insurance through employment. And there is no mandate as to what that should look like, except that perhaps in the Democratic primaries, voters turned their back on Medicare for all. That is a single payer national health insurance system, which still is not, I think, expressing the popular will of Americans. There's no mandate on environmental policy. I mean, I think people believe that Biden will try through executive order or at least executive decision to rejoin the Paris Accord, but to do things like raise carbon taxes or other forms of regulation, he can do a few things through executive order, but there isn't, I think, a broad sweeping mandate to change US environmental or climate change policy. No mandate, it seems to me, for social justice. People may have been angry about the Supreme Court and how that was handled after Ruth Bader Ginsburg passed away, but it doesn't feel as though Republicans feel that their decisions to act in a way that was pretty inconsistent with how they acted in 2016, that's going to have negative implications for them at the polls. And so social justice remains as divisive as ever. And of course, I don't think there's any resolution over what's commonly termed the culture wars, the deep divisions that exist along lines of race and religion and other broader forms of culture in US countries. So don't want to be too negative here, but I do think it's important to be also as clear and as transparent in my views as possible. Complicated slide, won't again go through all of it, but there are some daunting challenges. And I think we all are aware of that the new president and the new Congress will face. Unemployment is still very high, even if it's come down from its peak this summer. And of course, the challenge there ultimately is getting control of the COVID-19 pandemic, which, as I speak, is raging more virulently in the United States. And should be said, in some other places in the world, in Western Europe, that even at its worst stages earlier this year, the number of cases is certainly challenging those previous elevated levels. We probably have better success in helping people to survive it, but it is still something that has to be brought under control if the economy is to regain its footing on a sustainable basis. A divided government in Washington is going to make it hard to pass packages like Nancy Pelosi's $2.5 to $3 trillion stimulus package. It's going to have to be smaller, and it may be delayed till January. The so-called lame duck session, which ensues in a few weeks' time, is not probably going to take up big sort of important issues like how much to spend and for how long and so forth. Perhaps a patch can be put in place, but the big heavy work lifting will have to take place in the early months of 2021, and it's not now as likely that we'll get a big fiscal stimulus package. So a lot depends on acts to prevent the virus from spreading, and ultimately, of course, on a vaccination. The new government is going to face a massive fiscal deficit, currently 15% of GDP, on top of obviously a big stock of debt, well over 100% of debt to GDP. The approach is going to be first to let the Fed, and the Fed has acknowledged this absolutely as candidly as it possibly can, that it effectively is monetizing that debt, keeping interest rates low despite the big supply that's hitting the capital markets. And I do think, and we'll come to this in just a moment, that Biden and his administration and his advisors will lean towards postponing any steps to address that deficit until such time as the economy has returned to full employment. So whereas Bill Clinton or Barack Obama early in their terms had to address big deficits through austerity, higher taxes, and so forth, this is an administration that's likely to put that decision off until the economy has healed and until the coronavirus has really been dealt with in a sustainable way. There are big challenges around the issues of fairness. 5% of Americans make 25% of all national income. In fact, 20% of Americans make 1/2 of all of GDP in terms of their income they take home. That was, somewhat on the ballot. It's a recognized issue, but what voters want is not clear. But taxes probably will at some point go up on higher earners. But I think there's also going to be more efforts on improving training and possibilities for those who are at the median income level or below, who obviously are looking for new skills, particularly in the current environment. Healthcare I've discussed, climate change I've discussed, but those are obviously going to be big issues. There will always be appointments to the courts, if not to the Supreme Court, then to federal courts. And the big challenge is, can any nominees get past a possible, maybe even now probable, Republican majority in the Senate? Foreign policy, it's been adrift. We'll talk about that in a moment, but a lot of work there to be done by the Biden administration. Ditto trade policy, as we can well know, it's been weaponized in the last 4 years. How is that going to change going forward? I'll come to that in just a moment. Antitrust policy, are they going to break up the big tech companies or not? Again, point I'll come back to in a moment. Police reform, social justice, of course, major domestic issues in the US, really big challenges. And of course, crumbling infrastructure is also one that for a long time has been recognized but not dealt with. So you can see that Joe Biden has his work cut out for him is perhaps the way to summarize this slide. I think if we think about it from the market's perspective, the next 6 to 18 months, pandemic control and its impact on the economy is going to be really a big focal point. As I said, fiscal stimulus is going to be constrained, and a lot depends on that Georgia vote on January 5th as to whether the Democrats can, get to a 50-50 story in the Senate and therefore pass maybe more important and more, let's say, effective fiscal stimulus policies by deploying the vice president to cast tie-breaking votes if it comes to it. So I think markets will be looking very closely at those elections. So apologies, there's going to be at least one more big important vote that investors are going to have to think about, and that's on January 5th for those 2 Democratic seats. I think that ultimately the big issue, though, for markets around the pandemic is fiscal stimulus is, of course, a short-term patch. It's really going to be whether Americans practice better social distancing, we invest more in tracking the virus, in tracing, in sort of selective, let's say, quarantining of individuals or communities, and then naturally, whether a vaccine can be developed and distributed. But all of those things feel like a slog, a difficult attempt, particularly through the winter months when people are more likely to be indoors and where obviously viruses of all forms have a better chance of spreading. So unfortunately, the coming months still look to be very, very challenging. And for the economy that needs fiscal stimulus, it's rather disappointing that the numbers will be a little bit smaller. In trade policy, I think that Biden is going to cool the trade war rhetoric. Globalization is stunted. I think that's without a doubt in the sense that there are many people who feel that, rightly or wrongly, that they've been harmed by globalization. As an economist, I could take the side that would say that they've actually benefited from it, but perceptions matter more than reality. So there isn't going to be a reopening of big sort of broad sweeping multilateral trade negotiations, TPP or transatlantic or any others. But I do think that Biden will pull back from the weaponization of trade that Donald Trump pursued. Some people may wonder why I say that. After all, the perception is that Democrats are against free trade and Republicans, barring Donald Trump, tend to be in favor of it. I think that's a very, very wrong perception. If you look at the post-war period, the major openings of trade that the US engaged in, starting with the General Agreement on Trades and Tariffs in the 1940s and 50s, through various rounds of liberalization to NAFTA, to establishing the WTO, to having China join the WTO, all of them, without exception, were either initiated by Democrats or signed by Democratic administrations. The reality is that Democrats have been very, very free trade oriented in their actions, even if at times politically in their rhetoric they've been skeptics. And Biden comes from that long tradition. He understands the importance of the globe for the US as both an area that is beneficial economically, but also politically. He is a globalist, even if globalization won't be carried the day. And therefore, I think we're going to see a dialing back of both the tariffs, they will be withdrawn, and of the rhetoric. And that's unambiguously positive for world economic activity, unambiguously positive for some parts of the world economy. And in particular, it's a shot in the arm for emerging markets that are most exposed to things like trade wars and the uncertainty surrounding them, given their important roles in global supply chains. I think Biden's going to cool rhetoric in many other ways, building alliances and rebuilding alliances and speaking more softly, even if behind him he has big sticks in terms of economy, diplomacy, and even the military strength of the US when he's addressing adversaries like Russia or even China. And that's going to lead to a decline, already is, in risk premiums that ultimately is good for risk assets like equities, should lead over time to somewhat steeper yield curves, should lead to some rotation in markets as well. And I think the other thing that's broadly known is an administration that is basically trying to reestablish some elements of the status quo ante across all of these sorts of policies, fiscal, trade, foreign, and so forth, is got the back of the Fed. The Fed has a steadfast commitment to pushing inflation higher, indeed above its target. It will obviously therefore support the bond market. The bond market vigilantes will not be able to undermine the US government. And as a result, that's also both healthy and positive for capital markets. The one implication, of course, that we think we've seen is that when markets are doing better, is that the US dollar tends to weaken. So we're probably into an environment where we have a weaker dollar, which, among other things, is going to be good for emerging markets, will tend to support commodity prices, including gold prices. So if there's a sliver of good news there also for South Africa, I think is to be found in that space. So apologies if I went on a little bit too long there, but those are at least some broad conclusions as I see them from these very, very important elections And I think at this point, Adriana and I will share a conversation about some other topics. Thank you.
Right, thanks, Larry. That's quite a bit to digest, quite a few things that have quite a substantial impact on markets in particular, which is obviously of big interest to us. But before we get there, maybe let's just focus on the results. What's interesting here is that if you look at the pre-election polls versus the exit polls and the differences there, why is it the case that there were such substantial differences, not only in terms of the candidates, but also in terms of what the exit polls suggested, what voters deemed to be important or not? You'll recall when we had our earlier discussion, there were a certain set of things that popped up, including taxes, and as you alluded to, this time around, it seemed less important. What do you think happened there?
Yeah, so there's a few aspects of your question that I think are really, really important and that I'd like to address. The first is the difficulty pollsters have in predicting elections. We saw the same thing in 2016 in the United States. That is a very surprising outcome, even more surprising, frankly, than this one, at least at the presidential level. And of course, we've seen kind of surprises in other dimensions. The Brexit referendum was another huge surprise for pollsters who didn't predict it. So I think pollsters have been at work for years, but have not solved the problem. That is, how do you actually get, perhaps number one, an honest answer from the person you're asking? And then how do you gauge some other factors like turnout, for example, who is actually going to cast a ballot? The so-called hidden or quiet Trump voter, which has its manifestation, say, in the UK with that hidden supporter of Brexit that didn't want to answer it correctly, may come down to sort of a social acceptance bias that people kind of know that perhaps it's not quite desirable to say that you support someone like Donald Trump, but so you may not admit that to a pollster, but when you go and cast your ballot, that's indeed what you do. And there seems to be some of that bias in polling, and they have not quite worked out how to do that. On the other hand, we have to be a little bit fair to the pollsters. The big ones that people generally recognize, Nate Silver, 538, some of the big media outlets and so forth, they got in some ways it right. They said, look, and this was the easy one, Biden would win the popular vote and win it by a fairly big margin. His 4 percentage point margin is not wildly off what the polls were saying before the election. His ability to seemingly get, because we again don't know at the time I'm speaking to you, that he's going to get over 300 electoral college votes is not very far off what they predicted. I think, though, that the margins of victory in those states is an area where they missed it. Everybody thought it would be done and dusted by 24 hours after the polls closed, but indeed it took us another 4 days, I guess it was, to finally be able to declare the victor. And then they really missed what we'll call down ballot. So it feels as though a number of voters, even though Donald Trump picked up a number of new votes this time relative to 4 years ago, it is still seemingly the case that a number of voters decided to split ballots, which is a little bit odd. In other words, they said, I can't vote for Trump, so they may have left it blank, or they might have actually voted for Biden. But then further down the ballot, they said, I am going to vote for my Republican senator, member of Congress, governor, etc. And that's rather unusual, and I think the pollsters missed that as well. So again, with apologies for going through a bit of that detail, that certainly is one of the points. I also, though, think with respect to a part of your second part of your question, I heard is that the vote was largely, I think, a referendum on Donald Trump, and probably even slightly more precisely on his mishandling of the COVID pandemic. We can't do what would have happened, right? We can't rewrite history, but had the pandemic not arrived, it feels like we would have had a second Trump term. And that's important because it didn't allow this election to be debated over many of the other issues that I just described. And hence the other thing that pollsters were trying to ask is, well, how do people feel about healthcare, or how do they feel about social unrest and police brutality? And those things just never really made it on the ballot. And Joe Biden, in running what was a fairly effective campaign, focused in the final 2-3 months of the campaign, hammering the issue of the pandemic. and the mismanagement of Trump around that policy. So if the vote turned on that, it also meant that it disguised how people feel about other really important issues that also have to be tackled.
Yeah, I think that's really important, because if you now consider how that strategy has panned out, obviously worked in Biden's favor, but at the same time, he still inherited the same problems, even though they haven't been discussed as yet. So, I mean, if you, like you mentioned, 70 million votes for Trump, it seems like the whole populism sentiment is still, alive and well, and it needs to be addressed at some point in time, although it's not important today. So it would be interesting to see how Biden is going to cover that. I saw over the weekend he mentioned that he's going to try and be a president for all Americans. So I wonder whether that's maybe his statement to try and address that concern. But is that a challenge, a realistic challenge that can be addressed?
Yeah, I think that, again, there are probably two aspects of this. One is really whether the divisions are as deep as many pundits, myself, I suppose, included, believe they are, or they appear to us in all the ways in which they're manifest in the media, as well as in other ways. The country, I mean, without going into a long sort of philosophical, historical sort of discussion, I think these divisions do date back all the way to before even the Revolutionary War, but certainly the founding of the country, and the way in which the Constitution was drawn up was addressing in many respects these differences that are what we now, I think, call the culture wars, but are really sort of different ways of perceiving what government does and how people sort of look at the world around them. So they are deep. They're very, very deep fault lines. So his ability to unite is something that has historically been a challenge. That said, we are in a hyper-partisan era. Social media, other things have probably aggravated that. So it is a big challenge. He is, I think, there's the old saying, cometh the hour, cometh the man. And for a time when Americans may be extremely divided, they're also, I think, looking for something different than they've just experienced. They do actually want bipartisan approaches. They may not feel like they can talk to their neighbor, but they still feel that government should be one that is able to compromise and resolve issues. So Biden is the right personality, has the right pedigree. He worked in the Senate for decades, which is going to give him a sense of how do you join forces with an opposition to achieve a particular outcome. So we've got as good a chances of bridging those gaps today as we've probably seen in a long time in the United States, but that doesn't guarantee that we will actually be able to move forward. The final point I'd say here, though, is that seen from the much narrower, more cynical prism that all elected officials basically jockey in their decisions with an eye towards the next elections, 2022 midterms, 2024 presidential. I think the Democrats know that they have a narrow opportunity to build on this victory, and that the basis for that has to be answering the question, the affirmative: are you better off today, meaning in 2022 or in 2024, than you were in 2020? So, James Carville, who was a famous advisor to Bill Clinton, coined the phrase, "It's the economy, stupid." And to some extent, that's right. It is COVID stupid, but really because COVID determines where the economy goes. Within that, there is also the final observation here that I'll make, which is that it has to be the economy for everybody. It cannot just be Wall Street. It cannot just be the top 1% or 5%. The Democrats will lose whatever gains they've made if the average person either doesn't feel better off, or at least feel like they've got the opportunity to be better off. And that's going to really be the key issue that defines whether Biden is a short-lived phenomenon and we fall back into more extremism and populism, or whether we're really actually going to rebuild something that looks more consistent with what most of the post-war era looked like.
And then in terms of there seems to be quite a few questions coming through in terms of Trump's actions from here. Quite a few people seem quite nervous as to what can be installed for markets over the coming months. Can you maybe just give us a sense of what your base case would be in terms of his actions going forward, and maybe just to put some landscape to it, just maybe a bear and a bull case? What do we expect? How bad can it get? And are we worried about nothing?
Yeah, wow, the toughest question of all to try to get into Donald Trump's head, if I may say so. So I think that, so first of all, there will be, and it's quite natural, at least recounts, and those can either happen automatically in some states where the margins were very tight, or they can be requested, and that seems to be part of the strategy. History suggests that recounts don't change outcomes. And certainly not given the number of states that would have to flip back the other way. But we should expect that. I think people are going to be relatively sanguine about that. There's really no way it feels, although I'm not a trained lawyer, that any of these things can be contested in a way where not just the entire outcome, that is the Electoral College, nor the outcome of a particular state will make it all the way to the Supreme Court, as Donald Trump himself has advocated and suggests is possible. That based on everything that I see, is highly, highly improbable, and not just in the way in which pollsters have got it wrong, but really genuinely improbable. You can imagine, of course, scenarios, and we hope to avoid them, where there is perhaps violence. There are obviously a lot of disgruntled voters and Trump voters. And we have unfortunately seen too much violence in the US in recent years, including around politics, Charlottesville and some other examples. One hopes that that's not be the case, but I think that's probably more about, let's say, the integrity and the soul of the American people, rather than something that will matter that much, I suspect, for capital markets. Donald Trump may never concede that he lost. That's probably more in his persona. There's no need for that. I mean, that's always a norm, but he's broken so many norms, it wouldn't be surprising if he broke that. That shouldn't matter for voters. It's not as though he can stay and occupy the White House after January the 20th. I think that's a very improbable scenario. Would he follow, for lack of a better way of calling it, a scorched earth policy of leaving in his wake sort of lots of damage to institutions, to norms, even to the economy? He is petulant, I think, but I don't expect too much of that. And I don't expect that it would be in some way supported by his own party. His party is still fearful of Trumpism and of the Trump voter, but they've probably lost some fear of him, because after all, he is losing power as we speak. But he can certainly be obstinate. He can certainly block any attempts to pass a short-term stimulus relief bill, let's say. He will probably pardon people. Presidents have the right to pardon. He's exercised that already. Most of them do it at the end of their term as they're leaving the White House. He may even self-pardon. That seems to be a possibility, although typically pardon for a crime rather than for a potential crime. So it'll be interesting to see. But again, none of that probably really matters for markets. So the worst case scenario is probably actually now really around a spike in COVID cases that causes big time shutdowns of the economy, not necessarily something that Trump would do.
Okay, interesting. And in terms of the trade policy, you did mention quite a bit of this during your presentation. I'm just trying to gauge, how friendly a Biden presidency would be for emerging markets in South Africa in general. So what I could deduce from the presentation is that maybe friendlier, but not necessarily overly friendly, or how would you position it? What do you think emerging markets can expect?
Yeah, so I think some of it will be, let's say, style, and then there may be some parts that are substance. The style is to cool the rhetoric. Biden will have an economic team around him that, for lack of a better way of saying it, will be sort of trained conventional economists. No Peter Navarro types with the president's ear. These are going to be kind of the standard academics that come out of the better universities in the United States. And if there's one thing that actually that 99% of trained economists believe in is that free trade is mutually beneficial. I think Peter Navarro stands out as perhaps the only economist who has some kind of a notion that trade is a winner take all. One side gets all the benefits and the other doesn't. And so I think you'll see people saying, look, that trade is good. Trade is good for creating jobs in the United States. And there will be also, I think, a standard refrain that would come out of key advisors like, say, a Susan Rice, who may be headed to run the State Department, that says that free trade is also, or freer trade, or less trade rhetoric, however you want to say it, is also terribly important for reshaping and rebuilding alliances, whether those alliances are in North America, Mexico, and Canada, whether they're across the Atlantic with Europe or across parts of the Pacific with Japan, Korea, and parts of Southeast Asia, or even actually as part of let's say, an incentive to try to help normalize and improve behaviors from adversaries like, say, China. So I think trade, it will be seen more as a carrot even with adversaries than as a stick against those adversaries. Which is not to say that there won't be disputes. After all, there are sections in US law and under the framework of the WTO that certainly allow for conflict and conflict resolution around unfair trading practices. And with an eye towards certain parts of the electorate, the US will selectively use those provisions to go after industries or even countries where they feel that those violations are taking place. But that's really back to where we used to be, not where we have been since 2016. So I think that that's largely about style. I think in substance, I think tariffs will actually be rolled back. Some of the tariffs that were put on, not just China, but on other countries, will actually be either reduced or phased out. And they'll be done so as part of a negotiation to achieve something as well, because after all, you have to demonstrate to voters that it just wasn't a unilateral capitulation, that you actually got something for it, but the tendency will be in that direction. And I think that's, as I said before, it's good in a risk premium sense. It means a less risky, less uncertain world, but it's also just a genuinely good thing for those countries that are part of those long, complex supply chains that weave their way around the world.
And then it was always interesting is to watch that, how the first 100 days sort of roll out. Do you think there will be a focus on restoring that trade relations? Or do you think that's secondary to other priorities?
I think it has to be secondary, right? Trade exports, account for mid-single digits as a percentage of GDP for the U.S. They're more linked with high-income jobs in the U.S. And more linked ultimately to things like services. So it's not a big area of employment, no matter what one will say. I mean, manufacturing employment, if you look at that as a subset of it, is less than 10% of U.S. total employment. So you have some real challenges here that are going to take front and center. When Biden spoke this past weekend in his, we'll call it, acceptance speech, or at least his first speech as president-elect, he emphasized only one policy issue, and that was setting up a blue ribbon commission of scientists, public health experts, and doctors to formulate the new plan for attacking the COVID pandemic. COVID will be the number one issue from day one, because everybody, I think, understands that addressing COVID is absolutely essential for getting the economy back on a stable footing, for putting all those people who lost their jobs earlier this year back to work. So that has to be the number one priority. Behind it will come some elements of what I will call the necessary fiscal stimulus that's required to see us through until we actually arrive at the stage of a vaccination. And those sorts of things will be higher on the priority list than trade. But trade is pretty easy for a president because the rhetoric can change immediately from his pulpit. And some of the actions, as we saw under Donald Trump, are entirely the prerogative of the president with no need for legislation. So for someone looking for quick wins, and Biden will, especially if he faces a hostile US Senate, trade is a natural place to pick up a few of those points.
And then you mentioned that the stimulus required to get the COVID scenario turned around and economic growth going again. But at the same time, that the debt to GDP levels are quite elevated. So you're in a very tricky position where you can extend those debt levels further, and it would be the right thing to do as long as there's return on investment. But I mean, it's a very big call to make. Also feels like smaller stimulus, might just be flashes in the pan instead of anything that really helps with substance. So if the strategy is to do something to get the economy growing again, and you have to take a hit on the debt to GDP, and we'll sort that problem out later, what do you think they will be comfortable with in terms of debt levels? Where do you think this could go?
Yeah, so I think that there's a political and economic or financial aspect to the question that you pose. Let me start first with the political one. It being objective, not trying to bring in whatever sort of values or preferences I have. It's easy to look back over the last, roughly speaking, 30 years of US politics and seeing what will now be with Biden, the third Democratic administration to take office, and to essentially see a gigantic fiscal mess. In other words, Reagan and George H.W. Bush left, by today's standards, maybe smaller, but at the time it was perceived to be a big fiscal hole. It was 3, 4, and as high as 5% of GDP. When Obama came in, the economy had cratered under the global financial crisis. And of course, the first act was stimulus, but because there was an economic collapse, there was already a huge deficit, 10% of GDP. And now we face 15% of GDP. In those early administrations, Clinton and Obama, the job effectively over their 8-year terms was fixing the problem that they inherited, which was largely through unpopular measures. Now, they were both very effective politicians, so they won re-election, but they raised taxes, they cut expenditures, and they repaired the fiscal hole, so much so that under Clinton in his last year, the US actually ran a budget surplus for the first time in the post-war era. And under Obama, it got us back to more acceptable levels of deficits. So I think Biden, from a political point of view, looks at that, and his advisors do, and they say, well, financially or economically, that was absolutely appropriate, but politically it cost us, right? We saw no benefit from it politically. So from a political point of view, and Paul Krugman, who has an ear with leading Democrats, including with Biden, has been vociferous in recent years, saying the next time, and that means now, don't clean up the mess. It's not yours to clean up in some sense. Now, that's an extreme view, but I think in its practical terms, it means that will not be a priority in the first years. As I said, in 2022, midterm elections, 2024, the next presidential elections, the people are going to vote on whether they individually are better off or not. They're not going to look at the budget deficit, right? So getting the economy back to work and raising after-tax median income in the United States is going to be decisive for the political fortunes of the Democratic Party, for Joe Biden or Kamala Harris, whoever stands in 2024. And I think that's going to supersede austerity and fiscal adjustment and addressing that big budget deficit. There's a corollary, which is the economic or financial one, which is that the Fed, in changing its objective around inflation, permitting, even endorsing an overshoot, but also in the absolutely clear language of Chairman Powell in recent months, has said we need fiscal stimulus. I mean, he is as adamant about that as any economist writing these days. The Fed is going to underwrite those budget deficits, and they're going to underwrite even bigger ones if they come. Now, they can't do it legally by buying the at-issue treasuries. They buy them in the secondary market, but the effect is exactly the same. I think I mentioned in the presentation, the bond market vigilante, which we used to talk about, well, certainly when I was getting into the industry in the 1980s, that was going to punish governments if they ran big deficits, is himself or herself absolutely taken out of the game by a Federal Reserve that's willing to use whatever size of balance sheet to make sure that interest rates remain low. largely to meet its inflation target, but as a consequence also to permit the kind of fiscal flexibility that I've just been talking about. So there is a day in the future, but I think it's probably after 2024 when the US will have to make a concerted effort at deficit reduction. But debt to GDP on a net basis, which I know is a technical term, is over 100% in the United States now. Across that, meaningful threshold, let's say, it's probably headed to 125% of GDP, maybe 130%, levels that we used to think of, well, gee, that's where Italy is or where Belgium is. By the way, Japan is at around 250% of GDP, to put some context around these things. As long as you have a supported central bank, it's just not going to be all that meaningful for anything, for politics, nor for markets. And so the Fed's giving them the green light to do it, and I expect they'll take that.
And then from there, what do you think the impact's going to be on the US dollar? I mean, you did allude to that in the presentation as well.
Yeah, so there's a short run effect here, which for many investors may be the important one, which is that as we have sort of seen in the last couple of years, but in particular, I'd say in the last 6 months or so, when markets feel a little bit more confident about the future, we're seeing gains in equity markets. Maybe we're even seeing some rotation into parts of equity markets that have been left behind. The dollar is tending to weaken in that environment against, let's say, the euro, a little bit more in that context than it has been against some emerging currencies, which have still been held back. And even there, I think it's been mixed. The renminbi's been a stronger currency. The Brazilian real has been a weaker currency. And so that has a lot to do with some of their underlying economic exposures and vulnerabilities and or advantages. But in general, I would tend to think that with the US taking a broad approach to make everything less risky, the COVID response is less risky, the economic response is less fraught with sort of divisive forms of risk, the trade front is going to be cooled down from the kind of rhetoric and actions that we've seen for the last few years. That decline in perceptions of risk is generally going to be positive for markets as a whole, but these past patterns would suggest that's also going to tend to weaken the dollar. So if we took, say, one metric, I'll use the most familiar out there, which is the euro dollar exchange rate, as opposed to, say, the dollar rand rate. It would seem to me that we're probably around 118 as I speak, or probably heading up through the 120 threshold. Maybe we'll end up somewhere closer to 125. This is not a huge move, but it's a tendency for the dollar to weaken. And as a final point, historically, that has tended to benefit gold, obviously of some importance for South Africa. Historically, that's also tended to benefit the broad emerging market class, especially when it's been combined with still subdued interest rates, which, as I said before, I think we'll see. And if you combine it with the third element, which is that view that trade is no longer weaponized, it feels as though this is a time now for even some of those countries in the emerging complex that have not yet seen their markets rally, as China, for example, has, or North Asia has. There may be a catch-up phase. Mexico is a natural candidate as a beneficiary of the things I've just talked about, but more broadly, I think emerging markets will benefit from that combination of reduced trade rhetoric, a somewhat weaker US dollar, and still contained US interest rates.
Okay, let's maybe one last question. Again, more related to portfolio construction. You mentioned the tilts towards cyclical and the steepening of the yield curve. So what does a Biden-friendly portfolio look like at the moment, other than the things that you've just mentioned?
Right. So it's a great question, and I think there's going to be some elements here, and I think lots of people will have probably differing views on these things. Let's start first with the things that have worked. Should one keep them? Right. Big tech has been the big winner in recent years. From a business model perspective, that still seems to be, from my point of view, a core holding. The key question there is, would the Biden administration be more favorable to what has already started under the under the Trump administration, which is antitrust? There's suits now against Alphabet, i.e. Google. Marginally. I mean, there are elements of the Democratic Party, Elizabeth Warren, AOC, Bernie Sanders, et cetera, who really want to try to break up big tech or at least regulate it more tightly. I think yes and no. I mean, you don't generally bite off the hand that feeds you. And American politics is very expensive, and a big, big supporter of the Democratic Party is Silicon Valley, right? Broadly, big tech. So I think that those business models, with a few perhaps sort of adjustments, will be allowed to continue. So I think big tech is still part of what is the right kind of part of a portfolio. But I think in the context of the declines in risk premiums we just talked about, there's going to be now more tendency for markets to rotate towards cyclicals. Steeper yield curves, typically within that cyclical context, help financials through net interest margins, through improving sort of asset quality as well, if we can get through this next stage of the pandemic. So I think financials will begin to perform a bit better. They have to some extent, but that will continue. Typically in that kind of environment, value as a style does better, especially with a steeper yield curve. But I think of all of the areas where rotation looks to be healthiest is in the emerging complex. Emerging markets are still the faster growing parts of the world. They've been held back, especially those that are slightly more cyclical, more exposed to energy and basic materials, and maybe also just generally to trade. And I think their day is now coming in light of some of the factors that I mentioned before. So within the equity component, I still like growth. I still like some of the really sound business models that drive the big growth companies, but I think it's also time to augment it to a greater extent than I would have in recent years by looking for some of that value and cyclicality that I just mentioned. As a final observation, I would say that the other big challenge for portfolios is, what do you do about your bonds? Typically are both our diversifier and our source of income. And bond valuations are just wretched no matter where you look. I can't put it anywhere any differently. And the income that they deliver, for the most part, is not great. There are emerging market credits that I think are still good. I think emerging currencies will also, for reasons I just explained, tend to improve in value. So some of that fixed income can come in the emerging credit, in the emerging local currency space. But ultimately, I think in terms of diversification, people are going to have to look at other strategies, which probably include things that we call relative value strategies, uncorrelated sort of long-short positions in capital markets. And they're somewhat more complicated. A lot of investors may not be used to them, but I think they're going to be more foundational in trying to build different types of returns that help us to have a diversified portfolio and therefore be sort of bond replacements in those portfolios. A long discussion for another day, I'm sure, but I think that's something that people have to begin to engage on already.
Hey, thank you so much, Larry. I appreciate that. I sincerely hope you're right. We've been starved for performance in emerging markets. We could really do with a turnaround there. Yeah, I think that's it for today. Thank you so much for the presentation and also allowing me to pick your brain. It's been very insightful, and yeah, let's leave the rest of the debate for hopefully another day soon.
Thank you very much, Adrian. It's a pleasure. It's been a pleasure.
Okay, and to our audience, thank you very much for joining us on this Think Big series. There's more webinars coming your way, so please have a look at the schedule and make sure that you dial in. Thank you so much for joining us today. Goodbye.